Mr. Flowmaster, sir, what's catching your eye on a very hot, spicy, and wild day in the markets?
Well, this what they were calling it Liberation Day, right? Yesterday, people have been kind of bracing for it. It's funny. My colleague Ed Tom put out a note looking at the term structure of vol and looking at the short-dated contracts, and the market really wasn't pricing in much of a Liberation Day bump. And it was a funny one because Trump went on TV right after the close yesterday, and you saw some pretty interesting trading, right? So basically yesterday was not impacted. The market was actually up a little bit yesterday. And then all the daily SPX and cash settled index options expire, but you have the physically settled ETF dailies that people trade as zero-day options that even though they had closed, you could basically exercise them or choose not to exercise them until 5 o'clock, depending on the brokers, the policy. So it's that whole contrary exercise feature of physically settled options came into play, and in a big way, right? It was wild. I was watching the market through the speech, and first we ran up about 60 handles. We got as high as like 5750. Okay, and right now we're down below 5500 in the S&P futures. This is a huge move, and really interesting that kind of the market seemed to get it wrong for the initial bounce. All the coverage says this was worse than expected. I think there's a lot of people trying to unpack things, and there's plenty of I wouldn't say there's panic. There's a lot of consternation. I'm getting texts from my relatives saying, please make it stop. What should I do here? And when that happens, I usually take that as a sign to kind of buy a little bit of the dip.
Remember, we agreed. You have to tell them to sell. We have to keep it going down. You can't tell them to all to buy. That's a secret only for us.
That's right. It's obviously one of the biggest down days we've had. It is interesting. The vol reaction is pretty muted, I think, because things were kind of priced in. Weirdly, it feels a little bit different than the early March turmoil, which was also tariff related, remember. I think there's a lot for traders and quants and market pundits to take apart here. There's a lot of history and some big questions about what's going on. Fortunately, the trading is super active. Liquidity has been good. We saw some wide markets, certainly for the first couple hours, but that's what you get in a little bit of a crisis mode. And things we're seeing, I think people are kind of looking for the sectors and the companies that might not be impacted. I think last I looked, actually, the utilities were actually up on the day. So, it's a bloodbath in terms of, if you look at the movers in the top 10 single names, you got Apple and Amazon down 7-8%, Tesla down almost 5%, but things have kind of stabilized here. And that's also one of the reasons the volume's kind of slowed down a bit. But as I said, we'll be close to 78 million, maybe even 79 million contracts. That'll be the second busiest day ever.